What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to break down what's going on with Tesla stock, what you should be watching for moving forward. I'm also going to talk about the overall market, what big piece of news just came out that's very important for all these different stocks, and what's happening to Tesla. As we had another piece of news that's very important. But before I break anything down about all this information, before I talk about why tomorrow is going to be a very big day for Tesla, SPY, Nvda, the QQQ, and the entire stock market, let me just mention a couple of things before starting. I am personally not a financial planner, so make sure you take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends today in just about 15 hours, so check it out before they run out. With that out of the way, let's get on with the video. All right, so Tesla was down about 2.67% for the day, and unfortunately, Tesla closed below the 200 EMA, which is another sign of weakness. Now, in order for Tesla to continue to sell off like this, we may need another catalyst, and so far, the news and the sentiment of the market is beginning to shift. But the question is, will we get another major catalyst for downside starting tomorrow, or will the market continue to see a bounce? And that's going to be determined by Apple earnings, in my opinion. And I'll break this down in just a couple of minutes. But first, let's talk about the markets. How are things looking so far? So just looking at the markets, there's this news coming out that the fear and greed index has dropped a little bit more. It used to be extremely greedy just a couple of days ago, just last week, just last month, even yesterday it was extremely greedy. And today it's now on the greed side, so it is starting to shift more in the fearful direction. I also want to note that the market has been at extreme greed for quite a while, and when this happens, we tend to see the market eventually needing some kind of pullback, and we're finally starting to get that. Looking at the overall price strength, right now, it still is very, very much in extreme greed mode. And this is on the verge, in my opinion, of cooling off just a bit because the market is due for a big change. Coming down to the McCullen volume summation index is showing the same thing. And then the puts and call options have been going up a little bit after getting this drop right here, but they're still at very low levels compared to before, as there's a lot of buying that has been going on in the markets. And as the majority of people start buying and buying and buying, that is when we start to see those pullbacks. And that's what this is hinting at right here. Also, if you look at the VIX, or the market volatility index, we're continuing to see the VIX, push to the upside, and it's getting closer to the 50-day moving average. Now, if it gets a break above it, that tends to signal like some downside for the markets. Typically, when that happens, that's when we would see moves like this. So far, we're close to it. We did get above it just a little bit. We have like a tick above it, but it's not enough for me to like turn super bearish just based off this indicator alone, because this indicator is going to be more telling if we get a bigger break in the VIX. We're still waiting for that, and we will see if that continues going into the earnings. Now, some news came out that it's very, very unusual in many of these investors and analysts' opinions that Fitch just downgraded the US's overall rating from a triple A to a double A plus, and that's despite with a stable outlook that is perpetuating. Now, what is so important about this, right? Why does this even matter? When you look at these ratings, it's kind of like a credit score, right? Here in the US, right, a lot of people have their credit scores. If you have a higher credit scores, you're more likely to be paying off your debt much quicker. It's more secure for those lenders. And this is similar to what this Fitch rating is telling us. The AAA rating is going to give a lot more security to foreign investors and other people wanting to make investments to get better yields and returns in a more secure fashion. And now that we got this downgrade, sure, it still is a strong rating with a double A plus rating, but it is a downgrade compared to before. And this is very suspicious in my opinion. Now, so we went from a triple A rating to a double A plus, showing signs of, once again, a bit of a mixed, nuanced response to what happened during the debt ceiling. And it just doesn't make sense to me how they're, all of a sudden downgrading the US's rating. Because they're using the debt ceiling as the reason to do it, but that happened many months ago. So why didn't they do this back in like May or June? Why did they have to do it now when the market historically tends to cool off and when the market just happened to be at these greedy levels? It could be a coincidence, or it may not be, right? Very suspicious stuff tend to happen in the market all the time. Then today we had Janet Yellen speaking. She ended up talking a lot about what was going on with these changes. She mentioned it's nothing to be too afraid of. We shouldn't be too scared of what's going on so far. And she also mentioned that this data is going to be trivializing the efforts that have been made by the Fed and the current administration and her own self. So she's calling those out, and she's mentioning that this is once again not really fair and that we should just not worry too much about this, and that the US is still in a decent place right now from the economic perspective and based off what she's forecasting. This is the same thing that the CEO of JP Morgan, Jamie, ended up saying. He mentioned that right now this downgrade is quite ridiculous and doesn't really matter too much. I do agree with him. It is quite ridiculous, especially this timing. But there are others that argue that there's so much debt in the U.S. and Americans are not in the best of places, and the U.S. government is once again not doing the best job financially. People argue that, right? They're arguing that, and for the reason of that, they're saying that there is some means of justifying what just happened. But honestly, the timing to me is just what's very, very odd, very peculiar. But we don't have to worry about it. What happened, and this is still going to affect the market to some degree. Now, this alone is not the only factor. We also have initial jobless claims coming out for tomorrow. So expect some volatility in the morning because of this. It comes out 1 hour before the market opens. Then 15 minutes after the market opens, we have the PMI report coming out, and then the ISM services PMI. So the services data is going to be coming out 15 minutes and then 30 minutes after the market opens. So expect some volatility because of this. Besides that, that's not the big thing affecting the markets. The big, massive thing for the markets for tomorrow is going to be the huge earnings coming out after the market closes. This is going to be absolutely massive. We have Amazon, we have Apple all announcing their earnings. Okay, it's going to be so big, and whatever happens to them will affect the entire stock market, from consumer discretionaries to the staples to, not to mention, other stocks out there like Tesla. They're going to be impacted by this. Now, if Apple ends up sinking hard, this is going to have a big effect on the whole market, as Apple is once again the biggest company in the USA. And Apple is going to have a big ripple effect on the market. It's going to affect us for Friday. Okay. And if Apple does the opposite, if Apple somehow manages to pump very hard, this could help the market for Friday as well. We will wait and see, but always be open minded just to be safe. Now, when it comes to Tesla, there was some news that came out that Elon Musk states that Tesla is working on the final piece of the FSD AI puzzle, which is very, very awesome news. I have a friend that was driving with the FSD not too long ago, and they said it's very, very impressive in their opinion, and they believe it's going to get done relatively sooner than what people are expecting. Now, that's just his opinion, but other than that, I still believe that there's still lots of truth behind what Musk is saying. I don't know if this implies that they're going to be just completely done with this anytime soon. It's going to take many, many years before this becomes a lot more accepted and a lot more used. But for the time being, there is progress being made on a daily basis, and this is going to continue to improve Tesla's company and Tesla's valuation. I think it's great news for them. This is good that Tesla's making these improvements, but that alone is not enough to help the share price given the bigger headlines and the current technicals. There's also news coming out, not news, but like the data coming out that's suggesting that the volume is 101 million, a little bit lower than average, which shows that Tesla's not getting as much aggressive orders so far. Now, right now, the selling is making up the majority of the volume, so please be careful with that, and this could affect us moving forward when we start to break important supports. The price pairs ratio, not the price pairs, the price versus short volume ratio, this one right over here, this one is actually a little bit below the 50% mark, which shows that it's not excessive shorting that's going on with Tesla. It has more to do with just selling pressure and also the whole market having its effect as big funds start to reposition given the current circumstances. Looking at Morgan Stanley as an equal weight rating, they're giving Tesla an equal weight rating as of right now. And then looking at the data, the price price ratio is starting to decline on Tesla, which is showing that Tesla's losing some strength relative to before. On a seasonality basis, Tesla tends to be green about 47% of the time on Thursdays. Thursdays tend to be one of the weakest days of the week for Tesla, but it's going to be heavily dictated by technicals and also what happens as we approach their earnings. I also want to add that July tends to be a relatively weak month for Tesla. 42% of the time Tesla's green, and the rest of the time Tesla tends to be red in the month of July. So it's not that strong compared to like a June or even like a May or something like that. Also, in terms of seasonality for the hourly basis, we tend to see Tesla, do a lot better during the second, fourth, and fifth hours. It's still showing this. I go over this daily just so that you could watch it for tomorrow if you are watching it. Look at those hours specifically. And finally, for the short sales volume, okay, this is continuing to decline. It's continuing to drop down. So we're not really seeing a whole lot of shorting on Tesla. We're not seeing Tesla being shorted to oblivion. We're not seeing Tesla being manipulated as much as it has been in the past. This is worth noting because if there was a lot of shorting, this could have led to something much bigger later on. The shorts could be waiting a little bit longer, maybe after Apple's earnings or something, to start piling in again, or they may not have a good reason to short Tesla as hard as they did before. So now let's break down the technicals very quickly. How are things looking for Tesla? Remember, Tesla had resistance at the 50 EMA, which is currently at 264, and major support at the 200, which is at 254 flat. And if you look at it, it actually closed below the 200 EMA, which is a bearish signal, despite being stuck between these EMAs for the last couple of weeks. So this is now a bearish signal for Tesla. Tesla is now breaking down, and we have to watch 250 very carefully because now Tesla has a risk of starting to fill some of these gaps way down here. I think there's a big gap that's all the way down in the 230s, unfortunately. And we could see Tesla drop all the way there to like 238 or so if we do continue to sell off very, very hard. But before it sells off, I just want to mention that there's a good chance Tesla's going to try to like range trade for a bit in the beginning. I think we're going to be testing 250 or so and just trade sideways between 250 and 255 for the time being. And what's going to dictate how this thing ends up moving is going to be Apple's earnings and other factors like that. If Apple gets like a big pump, for example, and like Amazon, these things just kill it and they have strong guidance, the market could bounce. Tesla could try to make its way back up to these high levels, like the 260s. If Apple does very bad and Apple sinks, the whole market sinks, Tesla's going to come all the way back down to the 240s. Now, what looks more likely? Considering that we broke below the 200 EMA, it's much more probable that Tesla's going to eventually break down. I want to make that as clear as possible. Yes, it depends on Apple and other factors, but based off technicals, it's looking weak. And it looks like the odds favor Tesla eventually breaking below 250 very soon. Tomorrow may be a very sideways day, a retest of like 250 or so, not really do anything too crazy until the earnings get closer. But there is a good chance it's going to eventually break below 250 and see the next important supports, which are going to be way down here around this 247.5 area, 245.95, 244.5, and then 242. Those are some specific supports to watch for when it comes to the way this thing moves. For resistance, you have basically this 254 area. If we do manage to hold above 252, then we have 255, 257.75, and then 260. Watch all these levels very carefully for Tesla, but just know the market is slowing down. Why is the market slowing down? We had bearish catalysts. The market was quite overextended. The market's due for a correction, and we saw the market extreme greed. On top of this, I want to mention that the dollar index is starting to push to the upside, breaking above 102, getting closer to 103. This is finally starting to affect the market, so it's not as impactful as before, which is why I didn't really talk as much about it. But as this thing continues to break out, if it breaks this high rate over here, this is going to be another bearish signal for the markets. But another signal that's starting to work like normal would be the 10-year treasury yield. This was not working for some time as well. The correlation was just not as strong with the markets. But now it's starting to work out as this thing's starting to pump even more. This is another bearish signal. If it keeps breaking above this 41 level, or in terms of percentage, it's like 4.1%. If it gets higher and higher, this is going to be another bearish signal, and it currently looks bullish for now, suggesting that the odds favor downside for the markets again. So these things are starting to suggest there's downside potentially coming. The VIX is also trying to break out, but it's going to be testing the 4-hour 200 EMA around this 16.4 area. If that breaks, there could be more upside for it because of the market potentially slowing down to cause that to happen, right? As implied volatility goes up. This could also be very good for options if you learn how to trade them properly. If you learn how to trade them, especially for like SPY, right? You could use IV to your advantage. But anyways, now let's talk about the overall market very quickly. For SPY, if you're very bullish on this thing, you want to see this thing hold above this 450 area, then eventually break 452. If you're bearish, you want to see it break below 450. Now, what does it look like? It looks like it's going to try to trade around 450 for tomorrow, maybe break a little bit lower as it's still looking kind of bearish. There's no true sign of a bounce. It's looking a little bit weak for now, so I'm going to be watching lots of sideways price action around 450. But from a technical standpoint, okay, we have a head and shoulders forming on the 4-hour time frame right about here, and it's very likely that this thing is going to come all the way down to about this 446 support very, very soon. So I'm going to be watching this thing potentially break below 450 very soon. The odds greatly favor that over the next couple of days. This will be impacted by Apple, so we're going to have to wait and see what happens with Apple. We'll see if Apple could try to change this, but just based off technicals, based off the setup, based off the volume, and based off what we're seeing today, this is looking weaker, and this does look like it's going to eventually break down. It seems more probable. For Apple looks like it's going to just range trade between 192 or so, just around that level, and have resistance around 193.29, going back and forth for an extended period of time. But then the big earnings report that's coming out is either going to shoot this thing up or cause this thing to get a rug pull. If it gets rug pulled, that's going to affect the whole market. For the triple Q, if you're bullish on this thing, you want to see it break above 376. If that breaks, watch 378. If you're bearish, you want to see it break below 373 and then eventually come down to 370. What looks more likely? It looks weak from a technical standpoint. Could get a bounce in the very morning, retest 375 or so, then continue to sell off a little bit to retest 373 and trade sideways around there for the time being, and then be heavily impacted more by Apple. It could even sell off a little bit more depending on other factors. Nvidia is looking relatively weak as well. If you're bullish, you want to see this thing make its way all the way up to about this previous resistance, previous support, which is going to become resistance around this 447 area. Then above that, we have 450, then 457, all the way up there. If it breaks lower, you're going to be watching our support at 440, and below that, we have 434, and below that, we have 430, then 426 as our supports. What do I think is more likely? Well, it looks like this thing is going to be range bound for a little bit longer before it continues to sell off a bit more because it's still looking kind of weak. And we could see it retest about 433 and try to bounce for now, but it's still looking kind of weak, and it's going to get a very, very big reaction to Apple. If Apple and the whole market pump, it could try to reverse Nvidia by like Friday. If not, it could sink even lower, all the way down to the 420s or lower. But we'll wait and see on that. For now, based off technicals, right now it looks more bearish, though it's looking kind of weak. So I'm anticipating some sideways price action with a little bit of downside and a potential retest of 433 or lower. That is unfortunate, but that is what technicals are suggesting. For Microsoft, this is once again starting to sell off as well. It's been selling off for quite a while, and it's actually getting very close to the support right here around 325. Going to be watching how it reacts to that. If that breaks, 321 is a possibility, but it's continuing to look relatively weak, not really giving us much of a sign of a bounce. Going forward, looking at something else such as Google. If you're bullish, you want to see it get above 130. If you're bearish, you want to see it break below 128 and eventually test previous resistance, which is going to become support around 126. How is it looking? Well, we're going to be watching how it reacts to the 50 EMA. I think it could try to retest 129 and reject, and we might see it come down to 126 after that. For Amazon, it's the same thing. If it breaks below the 200 EMA, you're going to be watching the support around 125.8. I think it could try to base around there. Then we're going to see how it reacts to its earnings. That's going to be very impactful, and I can't really predict which way it's going to go, so be very careful with earnings coming out. And last but not least, for Meta. Meta is going to try to attempt to bounce off the 50 EMA, at least try to do something around it. You can see today it was trying to hold above it. This is historically a nice support for it, so we're going to be watching this 312 area. If you're bullish, you want to see it retest like 315 and 316.79. If you're bearish, you want to see it break below this 312 and come down to 310, then potentially even lower levels such as 305, then we have like 300 below that. I think what's more probable is it's looking kind of bearish and may try to bounce a little bit off the 50, then eventually break down to about 310 or lower and make its way all the way down to 305. That seems more probable to me. But just to be safe, watch for how it reacts to the 50 EMA on the 4-hour time frame. That's what I have for this one, though. Thank you all so much for listening. Get ready for tomorrow. It's going to be a big day for the entire stock market, especially for Tesla and other tickers out there. Every stock is going to be heavily impacted by Apple. Make sure you are prepared for this. Make sure you prepare accordingly and do what you have to do because it's going to be a massive day for the whole markets and you have to be ready. All right, thank you for listening. Have a great day, everyone. Tesla and the market to the moon because the long term is still very bright despite this short term downside. Thank you and peace out.